the Fox 5 Morning News at 7.
Okay, are you looking to update your investments for 2020? Financial expert Chase Wilsey is here now with investments to hold and avoid this year. Chase, good morning. Happy New Year. Thanks for being here.
Good morning. Happy New Year. Great to be here as always.
Okay, a lot of people kind of take the new year to kind of reassess what they have in their investments, maybe look at that portfolio. How often should you update your investments? Because a lot of people kind of just, long term, I don't want to mess with it.
It really depends on what you own, of course, but generally it's not the quantity of the trades you do, but of course it's the quality of the trades you do. I mean, if you have these stocks that have gone up, let's say 300% over, X amount of years,
right,
maybe it is time to take some profits. You have to understand what you're doing, of course, but if you are in a 401k plan, just saving diligently, you have a good mutual fund, probably just staying the course is a good idea. So it really depends on your situation.
Okay, the investments that people should avoid this year.
Now this is really important, of course. I mean, the first one that I want to talk about is private REITs. Now that stands for Real Estate Investment Trust. Now these just scare the heck out of me. Private REITs, they're illiquid, they're non-traded. I mean, we've had clients, before they came to us of course,
right,
they've been in them for 8, 9, 10 years.
Oh, wow.
Thought they'd be out of them before then, but they just can't get out of them. You have to sell them for pennies on the dollar.
What was the draw originally for those? Were they kind of sold a bum deal and they kind of didn't understand it, or?
Well, the draw is you kind of build trust sometimes with a financial advisor, and
right,
okay, this is a good way to get diversification. You get into real estate, and a lot of people, of course, they love real estate, so that's a good buzzword to kind of get them into those.
Right.
But the broker, the advisor that's selling you those products, a lot of times he doesn't tell them that 12%, as much of that can go to marketing and sales commissions.
Wow.
So those brokers can make 7, 8, maybe 9% off selling you a private real estate investment trust.
So take note.
Yes,
and
be
ask
very,
a lot
very
of
careful
questions.
with those, yes.
Also, you're saying annuities and bonds?
Yeah, annuity is one that it kind of follows along a similar line as the private real estate investment trust. It's a lot safer, in my opinion, than private REIT, but a lot of times people don't realize that there can be penalties, surrender charges for actually taking their money. Sometimes it can be as long as 12 years, where you could be retiring and all of a sudden, I can't take money from it.
Sure.
And that's an extreme case, but you really have to understand the annuity, make sure you're not in one of those annuities. And the catch here is the more complicated it gets, typically the higher the commissions. They can be as high as 10%. So again, another area to watch out. And then bonds is one that is a lot more common for investors to look at, especially with target date funds nowadays.
Sure.
But I say be very, very cautious with bonds. What happens with bonds is you have an inverse correlation to interest rates. As interest rates rise, bond prices go down. So for example, the 10-year note right now is about 1.9%. If we're going to 2.9%, let's say, you'd lose about 8, 9% of your principal.
Wow.
And that occurs with all different types of bonds. So be very cautious with bonds as well.
Okay, let's talk about investments you should consider. Good quality equity. This is a good thing, but how do you find that good quality? It's easy for you to say, but how do you find those?
Yeah, of course. And of course, to look at the good quality equity, people call them stocks. Stocks get such a negative connotation.
Yeah.
Good quality equities, it's ownership in a business. It's not day trading stocks in and out. Right now, what we're looking at is good quality value stocks. You've seen a lot of momentum and growth stocks carry this over the last 10 years. A value stock is where you look at what you're paying for earnings, sales, book value, cash flow, low debt businesses. A great example of one is Carnival Cruise Lines right now. I really like that one. About 4% dividend yield, 40% debt to equity, 11 times earnings, and they've been profitable since 1989. So if you take the time to do the research, you can find some really great stocks.
Good track record.
Even though the stock market as a whole is expensive.
Okay, we talked about private REITs. Public REITs, however.
Yes, this is a much safer approach here. They are traded like stocks, so they're very, very liquid. They give you that exposure to real estate as well.
Yeah.
An area that I'm very excited about in the real estate market, healthcare. Good healthcare facilities, you can buy healthcare real estate assets, get a nice dispersion from that real estate or dividend almost, gives you some income and some potential for price appreciation there. And again, you're not tied into it for 7, 8, 9, 10 years.
You always hear gold is a good investment no matter what. Still the case?
I typically don't like gold, so this is actually a new one for me. But right now what I'm seeing is there's a little bit of a risk for inflation. I don't think we're gonna have 8, 9, 10% inflation or anything like that, but gold is historically a good hedge against inflation, and also it's historically a good safe haven asset. So I think we're gonna have a lot of turmoil this year, a lot of volatility, presidential year. We've seen some noise with Iran. I don't think that means it's gonna be a bad year for stocks, but having gold as a little bit of a hedge wouldn't be a bad idea.
Okay. Do we still check in on all these a year from now?
I think it's a good idea
Good
to
advice,
check in on,
yeah.
don't check in on your investments every day, of course.
Sure.
But understand what's going on with your portfolio. Don't just set it and forget it. Make sure you understand what's happening there.
I'm guilty of not checking. I'm a set it and forget it, and I shouldn't do that.
Just ask questions, ask the right questions. Just
I'd call
know
you.
what's going on with your
I give you a
investments.
call.
Yeah.
Chase, what are we doing? Thank you very much. I appreciate the insight. Happy New Year to you.
Thank you. Happy New Year to you as well.
All right.
Your morning weather.